Hello everyone, in this video I will talk about different types of workers. So the term worker is actually a very broad term, and it is the responsibility of the employer to make the correct designation. Because the employer's tax withholding and reporting obligations depends upon the proper classification of the worker. There are many types of workers that provide services to the employer. Like different categories of workers are common law employee, independent contractor, statutory employee, statutory non-employee, temporary help agency employee, and leased employee. The employer has the obligation for employees to pay, to withhold the income tax, withhold social security tax, withhold Medicare tax, and then pay the employer's share of social security, employer's share of Medicare, and also pay the federal unemployment tax on employees. But there is no obligation if the employer hires the independent contractor regarding the taxes, because the employer does not pay the taxes for independent contractor. So that is the main difference between the employee and the independent contractor. Usually, hiring an employee is costly for the employer, and independent contractor is less costly. And the cost depends on the tax reporting issues. The worker who performs services for the employer is your employee if you have the right to control what will be done and how it will be done. And the people in business for themselves aren't employees. For example, doctors, lawyers, they offer their services to the public, and they usually are not employees, but they may hire employees who work in the business of the corporation. There are tests to differentiate between the employee and the non-employee. These tests are the common law test and reasonable basis test. While there is no uniform definition of an employee under the payroll laws, most workers can be classified as either employees or independent contractors once the common law test has been applied. And the key for the common law test is the right to control. The control can be of three types: behavioral control, financial control, and the type of relationship. So, talking about the behavioral control, the factors that determine the right to control the details and the means by which the worker performs the work include your level of instructions that the employer gives to the worker and the training provided to the worker. And the financial control is whether the worker has any unreimbursed business expenses. You will see if the worker services are available to the public, if the worker has made substantial investment in the work, you will also see how the worker is paid and whether the worker realized profit or loss. So all these financial control, if the worker is totally controlling the way he's doing the work and the way he's providing the services to other people, the public, then it means that the person is independent contractor. Talking about type of relationship, the factors that generally indicate how the worker and the business perceive their relationship. Um, is there any written agreement? Is the worker provided with any benefits by the employer? Are the worker's services an important aspect of the business regular operations? If these are the conditions, then the worker is the employee. So if sometimes the employers, they tend to misclassify the worker as an independent contractor just to save some money on the cost of paying withholding and reporting taxes. So the IRS uses these tests to see if the worker is actually an employee or an independent contractor. Then there is a reasonable basis test. Even if the worker he meets the definition of an employee under the common law test, the employer can treat the worker as an independent contractor and not withhold the taxes if there is a reasonable basis for doing so. And there is a section in IRS, section 530 of the Revenue Act of 1978, that describes this reasonable basis test. This reasonable basis is based on the prior court decisions, the prior IRS audit of the employer, and long-lasting industry practice of treating the workers in that kind of situations as the independent contractors. So now let's talk about the status of employee as determined by law. Sometimes the Internal Revenue Code determines the status of the worker regardless of what their classification would be under the common law or reasonable basis test. Meaning that some workers who would be considered independent contractors under the common law test and the reasonable basis test are nevertheless considered statutory employees for certain purposes under the IRC. And some workers who would be considered employees under the common law or reasonable basis tests will be treated as statutory non-employees under the Internal Revenue Code. So under Internal Revenue Code, the employees that are statutory employees are drivers, insurance salespeople, salesperson, and home worker. And I have a little mnemonic highlighted here to remember these. The mnemonic is DISH. So in DISH, the D is for driver, and that driver must be engaged in distributing meat, vegetables, fruits, beverages, laundry, or dry cleaning services, and they must be paid on a commission basis, or the difference between the sales price of the goods or services and the price paid by the driver. So again, the driver is somebody who is engaged in distributing vegetables, fruits, baked goods, meat, beverages, or laundry or dry cleaning services. And in beverages, milk is not included. Okay, and they must be paid on commission basis. So if these are the conditions, then the employee is considered a statutory employee. Next one is insurance salesperson. Their principal business activity must be selling life insurance and annuity contracts, primarily for one insurance company. So they are working for one life insurance company, and their main activity, business activity, is selling life insurance. So this is life insurance salesperson. And if they are paid only on commission, then the employer is exempt from paying future taxes on them. Number 3 is the salesperson. Their principal activity must be working full-time for employer, taking orders from the wholesalers, retailers, contractors, or operators of hotels, restaurants, or similar establishments who either resell or use the merchandise in their own business. So they work as the salesperson for one company. And the last one is homeowner. They must work away from the employer's premises, but they must work according to the specifications provided by the employer. They should work with the goods or material provided by the employer, and they must be the material and good, whatever is not used, should be returned to the employer. The earnings of the home worker who is not an employee under common law test are not subject to future tax. Okay, now all these, the four, the driver, life insurance salesperson, and home worker, they are statutory employees, meaning that these persons may not be employees under common law, but they are treated as employees for certain employment tax purposes. The payments made by the employer to these statutory employees, that is not subject to federal income tax, but it is subject to Social Security and Medicare. So the employer will withhold Social Security and Medicare taxes from their earnings of these employees, but no federal income tax. Also, the employer will pay the future tax on these employees. Okay. So that is the statutory employees. Now let's look at the statutory non-employees. The mnemonic for statutory non-employees is REDS, where RE stands for real estate agents and DS stands for direct sellers. So the certain categories of workers may qualify as employees under common law, but they are treated as independent contractors for federal income tax withholding, Social Security, Medicare future tax purposes, meaning that the employer do not withhold any taxes from their earnings because they are non-employees. So no taxes withheld. Okay, so real estate agents are the people, the sales people who are licensed as real estate agents performing services in connection of the sale or rental of the property. Direct sellers are the individuals who sell consumer products on a buy, sell, or deposit commission basis to be resold in the home or someplace other than permanent retail establishment. So just remember, DISH is for statutory employees, REDS is for statutory non-employees. If the worker is a statutory non-employee, employer will not withhold any tax. Employer will not withhold any taxes. And if the worker is statutory employee, then the employer will withhold Social Security, Medicare, and food tax, but no federal income tax. Okay. And then IRS mentioned something about companion sitters. Companion sitters are also statutory non-employees. Companion sitters. They are the people who furnish personal attendance, companionship, or household care services to children or elderly people. They are also statutory non-employees. Now, there are workers who are also categorized as temporary help agency employee and leased employee. Difference between these two is that the agency, talking about the temporary help agency employee, the agency hires, screens, trains the workers, and agency has a right to hire and fire the workers. Agency is responsible for complying with payroll benefits requirements, and the employer who hires these temporary help agency employees just pay a fees to the agency for using the workers. So they are not responsible for any taxes or anything on them. And leased employees. Now, for leased employees, the agency hires them, trains them, qualifies the workers for the client company. They are responsible for withholding employment taxes. Agency is responsible for administration and funding of any benefits. And the employer who hires the leased employee, they pay a fee to the leasing company, but they may have the right to hire and fire the workers. They supervise their work. So that's the main 6 types of workers that we have discussed. Again, they are common law employees who are actual employees, and taxes are withheld from their paychecks. Independent contractor, they are not employees, no taxes are withheld from their paycheck unless as directed by the IRS. If the IRS directs, then the backup withholding is done on independent contractor at the rate of 24%. In another video, I will discuss about the backup withholding, but just remember that the employer is not liable to collect or report any taxes for independent contractors. Statutory employee, if the worker is classified as a statutory employee, then Social Security, Medicare, and future tax is paid, but the federal income tax is not withheld. Statutory non-employees, no taxes are withheld or reported by the employer. Temporary help agency employee and leased employee, everything is done by the agency regarding the taxes. So hope this helps to understand different categories of workers, and I'll see you in the next video soon.